Hello traders and welcome to another video review. Today is Monday 21st of June 2021. Let's take a look at the Forex calendar at the beginning of the new trading week. So that's everything we got for today. We have a retail sales data published from Australia. As you can see, the actual reading was way worse than expected, 0.4%, and way worse than the previous reading. So that's something to keep an eye on. Bundesbank monthly report is scheduled for release at noon from Germany. At 9 o'clock p.m. the FOMC member John Williams will give a speech, and deep in the night, 11 p.m. Westpac consumer confidence from New Zealand is being published. This is the consumer confidence for the second quarter. Market participants expect this confidence to increase from 105.2% points, of course, to 109 points. So, because the event calendar is not really very busy, let's take a look at majors. What do we have at majors? This is daily time frame chart of the US dollar, and as you can see, we got this very fast movement below this technical support at 119.93. So this is the first technical support that had been violated. The other one was 119.52. This one has been violated as well, and the market now is approaching the third technical support, which is 1.1831. So far the low was made at 1.1846, so this is only 16 pips away from the technical support. But we broke as well below all of the Fibonacci retracements as far as I can see. Let me just figure it out quickly. Yes, we broke below the 38, 50 and 61, so that's now a history, and this is completely new movement down on the euro dollar. If the 1.1831 is violated, then of course the market can drop as low as the low of the wave C from the end of the March, which is 1.1703. Please notice the RSI, because the RSI has hit the level of 30, which is extremely oversold condition level. We have a low at the level of around 27 points, so those conditions here are right now oversold. Okay, so we need a spike towards the technical support, and then we can see some kind of a bounce towards again 1.1993, 1.1952. Those levels are now technical resistance for the price. So let's just make them color code, which is red. And of course, only if this bounce breaks above the 1.1993, then we can say that the bulls have a chance to bounce even higher, but it doesn't look very good for bulls at all so far. After the bounce, the market would likely continue to either move in a sideways and then possibly continue the wave down. US dollar to the Japanese yen. What is the situation here? As you can see, the US dollar is not actually going up versus the Japanese yen. We have again the same sort of the pattern on the market, which is, as you can see here, we go up and then we are being capped. We go up, we are being capped. We go up, we are being capped. We go up, bearish engulfing. We go up, bearish engulfing. So the conclusion is, market is trying to go up. Basically, bulls are trying to go up, but they are being capped. which is why this move inside of this channel has still a typical sequence of a corrective move, right? This is not an impulse, which brings the further consequences, which means that one day after this cycle is terminated, the market will simply do another bigger wave to the downside to simply complete this this corrective movement to the upside. And then of course 109.21 might be tested, or even 108.41 might be tested. As you can see, the first three waves here are labeled as ABC. So this wave here is not ABC, it's more complex correction. Looks like a double zigzag here for me, which is A, B, C, X, A, B and C maybe, but as long as it is being traded inside of this channel, then of course bulls can still try this this move to the upside towards 109.98 or the key technical resistance 111.71. Overall, it is corrective. The bears are still counter-attacking the bulls, so one day or another, when this move is completed, we should expect another wave to the downside. US dollar to the Canadian dollar, very nice bounce. Why? We broke above the 1.2244 technical resistance. Now we are heading here. This is first important technical resistance. This is the second. This breakout is of course the biggest breakout in the whole cycle. So we have a price overbalance. So how does it looks like in the from the overall greater perspective? As you can see here, this is nothing for now. Okay, this bounce here is still below the last higher high, lower high, which means the downtrend is still continued. Of course, in order to break the sequence of the lower highs, the market must violate, as I said before, this level, the level of 1.2647, 1.2655, which is high of this 1.26 and 55. This is the key level right now. If it's violated, then the market would break the sequence of lower highs, but still there's the sequence of the sequence of the lower lows. Anyway, it looks very promising for bulls, but please notice that we are already in the overbought, extremely overbought territory. The recent print was 74 points, which is way above level of 70. So maybe the level of 1.2467, which is the technical resistance for the price, maybe this level will cap the rally. But so far we don't see any kind of a price pattern, any kind of candlestick pattern to support this assumption. Next target, we are going towards the long-term trend line around, let's say, 1.2550, and then of course 1.2655. If we ever get there, then this is the target level everyone should be paying attention to, because it's the key technical resistance. If there is something like this, bearish engulfing, maybe some doji candlestick, maybe some shooting star candlestick, then of course we might say this bounce is over, and we are possibly going back to the downtrend again. And at the end of the day, US dollar index, what is going on the US dollar index? We have a very big spike out of this channel. above 50% of the Fibonacci retracement, above 61% of the Fibonacci retracement. So the retracements are now useless. After 3 waves to the downside, we have something that might be looking impulsive, but there is some sort of very dodgy first and second wave. First wave of the impulse, second wave of the correction that was built here, right? So for now, we have this zone 92.32, 92.52. Okay, this zone has been hit again. It's a key zone for the boost, because we need to break it above it. Okay, if there isn't any breakout, then of course we might say that all of this movement was just a simple bounce, and then keep an eye on 91.41. Now this will be of course a support for the price, so it's gonna be green. Oh, there you go, and a bunch of other supports more or less important for the market participants. So right now, all eyes on 92.52, 92.32, in order to see if there is any battle of this zone, if there is any, of course, clue from the price action, candlestick pattern, price pattern, that would give us some sort of a trigger move to the downside. If not, then of course we are going up, we are going towards 93.42, the high of the wave C, and this up movement here would be considered bullish. So please keep an eye today and for the rest of the week for this zone. Maybe this bounce had been completed, and maybe it's just the beginning of a higher bounce to the upside. So that's everything from me for today. Thank you very much for watching, and I hope I see you guys tomorrow. Bye bye.